Good morning. It's Market Day Report. I'm Tony St. James. We're midweek and a couple of reports out this morning. We picked up a core inflation rate number, CPI. We also get crude oil stocks, gasoline stocks from EIA. That's all coming out this morning. We'll talk more about that in a moment. How about overnight trade, though, for corn? We did pick up export sales, 137,000 metric tons to Mexico. And again, nice little overnight sell earlier this week, but the market overnight down 0.75 pennies on the September at 377, with December at 396.5, down 0.75 cents. What about soybeans? After that big sell-off early in the week, bit of a rebound. Turnaround Tuesday, November, 967.5, up a nickel. Now the wheat market in overnight trade, starting with Chicago, September, off 2.25, 526.5. And the hard red winter wheat contracts have been down as well, with September off 3.75 cents at 544. Spring wheat contracts, Minneapolis, penny lower on the September at 5.92. And cotton, New York, December 16 points higher at 68.15. Brian Hoops is with Midwest Market Solutions. And Brian, I'm just going to kind of tee it off for you. There's a lot of, well, not necessarily a lot of information, a lot of news out there, but markets ready to move one way or the other. What are you watching?
Yeah, good morning, Tony. Like you said, just not a lot of fresh news maybe for the markets to trade off of. You know, we've had a pretty big day on Monday with the supply and demand report out, the crop progress numbers, and we digested them over the last couple days. It almost feels like maybe we need to consolidate or congest some of these numbers and just kind of tread water for a day or two. We saw a little bit of a bounce in the soy complex overnight. And I think that's likely because we're in such an oversold deep territory here. We need to have some sort of a correction, not a change in any of the real fundamentals. But it just feels like it could be a day that without a lot of news, that we consolidate, we congest for a little while. The forecasts really haven't changed much. It still looks very wet across the Midwest for this week. 6 to 10 day looks good as far as temperatures and precip. Everything looks normal. So there's really not any reason to think that we're going to see anything adverse to our yields at this point. And there's a lot of talk in the industry about yields increasing in next month's supply and demand report above what we saw on Monday for both corn and soybeans. So that puts us, on the defensive. I think you have to stay on the defensive. There's certainly a lot of producer movement of goods out there. But as far as today goes, no private export sales, no really any reports that are coming out other than that EIA report that comes out a little bit later this morning that'll show us some demand for corn. But it's kind of one of those days where it feels like we're not going to have big moves. It's going to be kind of a quiet, very choppy type affair.
Is this a good time to just stop and look at maybe where we find some support? Again, when you start seeing markets tumble like we've seen over the last, few days or so, do we find some support levels? Maybe corn, is that somewhere near 390, you think?
Yeah, you'd have to say, right around that 390 where we made a low on Monday would be your first support area. When we violate that, you're probably going to see a lot of sell stops being triggered. We've had a lot of clients ask us, hey, maybe what's an analog year to see what we're seeing? What did the charts say? And I think you really look at what the fundamentals say for an analog year to give us an idea of maybe where we're going for harvest lows. The stocks to use ratio for corn is about, I think, just a little over 13.2% or so. Soybeans is about 12.8. Both of those larger than what we've seen over the last 5 to 6 years. In fact, it's the largest stocks to use ratio since going back to the 2019 fall season. And at that time, corn fell to roughly 350 a bushel, soybeans around 850, 855 a bushel before we started to rally. So that may be giving us an indication of where corn and soybeans eventually could move to just based off of historical stocks to use numbers.
Well, speaking of rallies, let's rally over to cattle in just a moment. We saw some cash cattle trading earlier this week, and we'll pick that up in a moment as Market Day Report continues after this. It's Market Day Report. So glad you're spending your Wednesday morning with us. Maybe a cup of coffee? I need to find a cup of coffee. Speaking of that, hey, let's jump in. Livestock markets and live cattle yesterday. The August contract trading lightly at 184 even, up 67.5. Most active was October at $180.75 a hundredweight, settling 72 higher on the session. Also saw the rally in feeders with September the most active at 242.17, up 267. All contracts well above $2 in trade on Tuesday. Hog trade, though, in the red. The October contract 72.85 off $1.47. Bring back in Brian Hoops with Midwest Market Solutions. I kind of teased this, Brian, but cash cattle, Oklahoma City earlier in the week, we saw feeders 2 to 6 higher and steer calves up $10. Could that set the stage for cash cattle this week and then futures to follow?
Well, we're not going to see a $10 move in the Southern Plains this week, unfortunately. It'd be great to see, but we did note yesterday that the news is starting to firm up a little bit. We've had some negative news. Now it's improving, and that news, I think, gave us higher markets yesterday. Should give us higher markets again this morning, I feel. Cutout values are turning higher. The packer margins are improving. They were close to $70 a head negative earlier in the week, and now they're maybe about $15 a head in the red. So it's a big improvement. And the feeder cattle index starting to rally. That's up in 23 cents this morning. So like I said, some of the news here, bits and pieces of it is improving. The inflation numbers that we saw this morning coming down, the lowest inflation since 2021, I believe. That's a pretty big deal. Stock markets are rallying accordingly. Maybe we can see a little bit of a bounce again in this cattle market. Now, the seasonals are lower, so there's probably going to be some selling as we get into retracement levels, but we're quite a ways away from that. We're $1 to $2 away from any type of those levels being reached. So I wouldn't be surprised to see us move higher here, but maybe a lackadaisical type affair. I don't think it's going to be a straight shot higher.
And quickly, let's talk pork cutout values, moving a little higher as well. Ribs and bellies leading the charge.
Yeah, it's good to see that. That helps the cutout values move higher. Also, we're seeing hog weights come down. They were released this morning, and they're 281 pounds, so they're down from last week. We're still a little bit above last year. We were 277.2 last year. So it's an improvement, and that will help this hog market out along with the cutout values that you mentioned. We're seeing the bellies move higher. All that should translate into higher prices down the road here. August futures and options go off the board today.
There you go. President, Midwest Market Solutions is Brian Hoops. Thanks, Brian. That kind of sets the stage for where we'll go for the rest of this day midweek.